And on today's show, disability insurance, part 5 of this week's On the Final Four product review with disability expert Tim Kakuza. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician and Innsmark. Let's get down to business. Well, welcome to the Final Four product review, Tim.
Thanks for having me, Steve.
Well, you are the DI guy, and I want to talk about individual DI. Who are the players? Now listen, I know our inventory, and actually when you really think about it, I went out on the net and I saw about a dozen carriers out there that really play, but they don't all own the big part of the market. I'd like to know, let's just start off in regular DI. It's the most neglected insurance. Most planners don't bring it up. And I think this is an area where you could really increase your market share in the business community. And it's a huge issue for business execs, especially the guys that are getting older. They like this protection. Talk about the players in individual DI as an executive benefit.
Yeah, there's some great disability players in the marketplace. You know, when you look at that type of arena with the executives, you're going to look at the white collar marketplace. We represent 3 of the top premier disability carriers in that space: MetLife, Principal, and the Standard. All 3 of those are very well respected in the marketplace and have phenomenal products that when you get into that type of a marketplace, that executive marketplace, we have all the features and benefits in a policy of those 3 carriers that anyone would expect to have and want to have in their disability policy.
Tim, when you're looking at these 3 players that you really like, do you see one that stands out from a definition point of view? Because isn't that all about DI, the contract definitions?
Yeah, the critical aspect of any disability policy is going to be what the definition of disability is. So when you become disabled, and there is a great likelihood of you becoming disabled during your working career, so you want a policy that's going to be able to protect you in your occupation class and pay you a benefit without having to jump through a lot of hoops. So when you look at those 3 carriers, again, you have the ability to provide what most industry experts refer to as the modified or not engaged definition, where nobody's ever going to ask you to go back to work in a new occupation, which is a great baseline definition. And then all of those carriers can step up to a true own occupation definition that allows you to go back to work in a new occupation if you would want to, and then still collect 100% of your disability benefits plus your new income. Now, a carrier like the Standard on their Platinum product, they have that built into their product, whereas MetLife and Principal, you're going to add that in, but we have the ability to add that in and make it just a premier disability product.
When you're talking about these 3 carriers, Tim, what's the underwriting like?
Yeah, that's a great question. You know, in the underwriting marketplace, and I've been in this business for over 20 years now, and I was talking to a group of agents not long ago, and I told them that now is the best time to be in disability. The carriers have stabilized, these products are phenomenal, and the underwriting is really good. There were some issues a number of years ago with underwriting. The carriers are really figuring out the underwriting. A couple of the big areas: mental, nervous, drug, and alcohol, anxiety. They're getting their hands wrapped around that, and each week you're seeing better and better offers. So from an underwriting perspective, even though there's a lot of other medical conditions that didn't exist 10 years ago, they've got this figured out. They're figuring it out as we go along, and now's as good a time as any to be selling disability.
When you're talking about these 3 carriers, we have a lot of action out on the web. I've noticed that when I Googled a lot of this, people are promoting own OC, these real specific areas of vocation. Talk about these 3 carriers in light of own OC and who are the players.
Yeah, the own OC definition really can be very specific. So when you're talking about a surgeon, that surgeon might want to have that true own occupation definition so that if he can't perform surgery ever again, he can become a general practitioner, collect 100% of his new income plus 100% of his disability benefits. Those 3 carriers do have the opportunity to upgrade their baseline definition to a true own occupation definition. There's also a medium definition for transitional disability, which is kind of a hybrid from the modified to the true own OC. In some of those situations, you might have a limitation for mental, nervous, drug, and alcohol based upon the specific carrier and the specific occupation class, but you can get that true own occupation definition across the board with those 3 carriers.
When I'm looking at the possibility of going past what I call the traditional coverage of age 65, is there anybody that we're looking to when you get to older execs that still want this benefit?
We're seeing more and more of that. Two areas really to look at. One is additional income on top of what the traditional carriers will do, and ages of issued parties for the disability product. So typically an issue age could be 59 or 60. Some might go a little bit longer than that. But we have access to a Lloyd's of London cover holder, Peterson International. We have a great partnership with them, and they can do some things in the marketplace, both from an age perspective and an income perspective and replacement perspective, that the traditional carriers just aren't able to do.
Well, did I hear you even flirt with the number 70, age 70?
Yeah, MetLife actually with their new product has an issue age of 70. Now, to me, that's a little bit unusual. I don't know how they're actually having a traditional carrier with an issue age of 70, but they now have on their new Income Guard product an issue age of 70 on that product.
That's amazing. When I came into this business, there was nothing past 65. There were none of the flexibility that you're talking about with all these carriers, and these are big players.
Yeah, what you're seeing again is it's really a great time to be selling disability. The MetLife product, and not to do a commercial, but the MetLife product, it's a product basically that they just introduced in the last 8 months or so. Their old product was 10 years old, and they made their product better. They actually reduced pricing, and they added features and benefits to a new product. So, I mean, what a great situation to be in. You've got a better product with better pricing, and again, it's a great time to be out there selling disability.
When we come back from the break, we're going to talk about supplemental LTD DI, and we're going to touch on guaranteed issue about 30 seconds later. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, we're back at segment 2 with, of course, DI expert Tim Kukuza. Tim, I want to talk about supplemental LTD DI because a lot of people don't do full-blown group anymore, but this supplemental long-term, the LTD DI, that seems to be a play.
Yeah, we see a tremendous amount of activity in that marketplace. And what you have there's a couple different things to focus on. When you look at group LTD benefits, you look at the replacement percentage, you look at the cap. So a typical DI plan pays you a 60% replacement with a $5,000 cap. But you also look at what is included as income. So if you have any sort of incentive comp or commissions, that may not be included with the actual earnings criteria in that group LTD plan. So when you look at the taxability along with those 3 or 4 other things that I just mentioned, we see supplementing group LTD on a daily basis for you to be able to include more income replacement, make up for the taxability of that group plan, and then also focus on any sort of incentive comp that really is naked in a group plan a lot of the time.
What are your players in this space?
Yeah, for supplementing on the group LTD, we can even do that on a blue collar type of carrier. So, a lot of the industry focuses on the white collar side of things, which is a great marketplace and there's a lot of opportunity. So you look at the 3 traditional carriers, Principal, MetLife, and the Standard. But even on the blue collar side of things, we see a lot of situations arise where clients have a group plan sponsored through their employer. They're more of a blue or gray collar type of occupation class. And if you're living paycheck to paycheck, if you take a 40% cut in pay that's taxable to you because your employer is going to provide your group LTD benefits, that may not be able to get you through your disability. So we can even supplement that on a blue or gray collar type of situation.
Talk about guaranteed issue DI. Now, one of your surprise that I saw on your list here is Met. Talk about that.
Yeah, guaranteed standard issue disability. I've been seeing a lot of activity in that arena also. And what you talk about there is one of the things that really agents shy away from in regards to disability is underwriting. There's financial underwriting, there's medical underwriting. With a guaranteed standard issue disability program, typically you're going to need at least 5 people involved with that program, whether that's an employer-provided program or whether that's a voluntary. On a voluntary basis, you may need more than 5 lives. But let's assume you're going to get 5 lives participating in this situation. What you have an opportunity to do is provide us a census that includes occupations, incomes, genders, and other information. we can look at it and approach the carriers and ask them if they're willing to give us a guaranteed standard issue benefit amount, maybe somewhere from $2,000 to $5,000. The key element there is there's no underwriting. If the carriers can encompass 5 lives or more into a group, you're going to get discounts on that group, and you're going to get no underwriting on a group like that, which is phenomenal for as small of a group as 5 people.
So I think that's pretty cool because you're going to have 5 people, and most small carriers, companies are going to have at least that. Let's talk about retirement. Now, this is an area where I know that everybody's doing, and retirement is so huge right now. It's just engulfing the market. But I noticed that people say, well, I have my DI, I bought as much as I can under the regs. I did not realize until I first talked to you about it in a couple interviews back, where you said, oh, Steve, we can add on top of the traditional DI protection for retirement. If you're looking at that issue as a standalone retirement guarantee, whether I'm disabled or I use life insurance in the case of my early death, I'm fulfilling my retirement plan. Talk to me about, what's the number? Is it a pretty good number here? Am I paying a lot of money to get coverage, or is it pretty economical?
Well, the first thing, as you pointed out, is a lot of people don't understand that if they buy a disability policy, that's a great thing to do. But also in buying that disability policy, they're worried about covering their monthly expenses associated with that disability policy. What it doesn't do is continue to fund your retirement benefits also. So some of the carriers, like Principal as an example, will allow you to add a rider to your policy that when you become disabled, you're going to get your monthly disability benefit through your policy, but then they'll also continue to fund your retirement program for you. They'll put it out in a trust so that every month when you were making contributions while you were working towards your retirement. And without this type of product, then your retirement's going to be flat for over those years that you're disabled. But we have carriers out there that are able to continue to fund that retirement program even when disabled.
Okay, and that's on top of my traditional DI. And this has to be a qualified plan, right?
Yeah, well, that's critical that, as you mentioned, it's on top of your disability. So it doesn't take anything away from the monthly benefits you're receiving. And based upon what your contributions have been in the past, some carriers will adhere to that. Some carriers, if you're disabled, will actually fund more than you were funding into your retirement program up to a specific dollar amount. So you may be actually getting more into that program on top of what you were putting in.
Tim, before we leave, BOE, business overhead expense. Any players in this area?
Yeah, that's a great product, and it's an undersold product. We can do blue-collar types of carriers. We can do white-collar types of carriers. Assurity is our premier blue-collar carrier. I mentioned Peterson International as our Lloyd's of London product. We recently did a BOE with Lloyd's of London for $400,000 a month of business overhead expense.
Wow.
That's an amount that I've never seen in my career.
Incredible.
The traditional carriers will go up to about $50,000 a month of business overhead expense based upon a plan design. But we can do that across blue collar, gray collar, white collar, excess lines. We have the ability to do it.
Well, Tim, I thank you for being on our show. That's all the time we have for today. Remember, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, legal counsel, and your broker-dealer compliance department. Missed an episode? You can view all our past episodes at downtobusiness.ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. This is Steve Savant. I'll see you next week.